Hi everyone, I'm Paul from AIA Investment Management. Welcome to this edition of our fortnightly video update, where I'll be sharing the latest global market highlights and key investment messages to help you navigate today's evolving market landscape. Let's begin with market performance. So global markets delivered strong performances in the past month as the easing of trade tensions and simmering geopolitical risks supported risk assets and investor sentiments. The S&P 500 index returned 5.17% for the month, achieving a new record high, while the MSCI World, representing global equities, and MSCI Asia ex-Japan delivered solid gains of 4.13% and 4.79% respectively. This brings the year-to-date returns to mid-single to double-digit returns as markets recover strongly post-Liberation Day. Moving to key US economic data. The US market continues to exhibit remarkable resilience despite ongoing policy uncertainties. Non-farm payroll for June rose by 147,000, beating expectations of 110,000, boosted by government hiring. On inflation, the Fed's preferred measure, the personal consumption expenditure, increased by 2.3% year-on-year, in line with expectations as the effects from US imposed tariff has not seeped into inflation data. US consumers took a considerably less pessimistic view about the economy, as the closely watched Michigan Consumer Sentiment Survey showed a better than expected 60.5, beating estimates of 54, and coincided with a softening in the heated rhetoric that has surrounded President Trump's tariffs. After announcing his April 2nd Liberation Day tariffs, Trump has eased off the threat and instituted a 90-day negotiation period that appeared to be showing progress, particularly with top trade rival China. Key updates on the One Big Beautiful Bill Act. US President Trump signed into law a massive package of tax and spending cuts on July 4th that potentially provides a fiscal boost to stimulate growth in the US economy, a day after the House of Representatives narrowly approved the signature legislation. The bill, which will fund Trump's immigration crackdown, makes his 2017 tax cuts permanent, but is expected to knock millions of Americans off health insurance and adds up to 3.4 trillion to the budget deficit over the next 10 years. The passage of this bill further supports investor sentiments on anticipation of the positive effects from the fiscal boost that supports the appetite for risk assets. Looking at this chart that dates back to January 1994 till end February 2025, for an investor that invests a hypothetical 300,000 into 100,000 allocations to MSCI All Country World Index that represents global equities, 100,000 into a 60-40 global equities and global investment grade bonds portfolio, and the remaining 100,000 into US Treasury bills throughout this entire period. Their investment would have grown to 1.7 million, despite undergoing major market shocks such as the dot-com crash in 2000, global financial crisis in 2008, COVID global pandemic in 2020, and aggressive interest rate hikes in 2022. This clearly demonstrates that market volatility is part of the investing landscape, and investing for the long term yields potentially strong returns. Through AIA stewardship, we leverage on our institutional capabilities and in-house professionals, partnering with strategic external expertise to build optimized portfolios that are well diversified across regions, asset class, and sectors. We provide active portfolio monitoring, making necessary adjustments to the portfolio as market conditions evolve to ensure that customers stay invested to gain full cycle returns. Thank you for your time, and I'll see you soon.